Welcome back to the most important video you can ever watch in your trading career. Now in this video, we're going to cover risk reward. And if you want to advance to the next level in your trading career, then you need to watch this video all the way through to understand how they can structure every single trade to make it a winning trade and how to also lose in a winning way. And you need to watch this video all the way through to understand really what I'm trying to tell you guys. Because I cannot emphasize this the most when it comes to risk reward is what genuinely saves your portfolio. I don't care how many trades you capture. I don't care how well you can spot a trade out. I don't care if you tell me it's finna bounce at this level. I don't even care if you're correct. Did you take the trade? And if you did take the trade, did you hit price target or did it hit stop loss? Did you even have a stop loss in mind or even a price target in mind? And are you just holding it just to hold it? Like literally all these things are in question and most traders don't ever think about this stuff. So they let a $500 entry trade go from $500 to $250. Now they're down 50% and then take another trade and lose the whole $250 and now their whole portfolio is gone. So I'm gonna show you guys exactly what happens if you start at a $500 portfolio in the option market, taking 1-to-1s. We're gonna start with that. What it looks like taking 1-to-2s, which is my favorite. And by far, if you can manage to hold a lot longer, capture a nice 1-to-3, of course, and go a lot higher and advance a lot more, then props to you. So first, we're gonna keep it real simple and explain to you guys what a 1-to-1 essentially means. Let's imagine you had a $500 portfolio on day one, which is right here. $500 portfolio is in the green right here. There's 5 days in a week. We're just gonna use a single week as an example, as well as if you had $500 trading different risk reward models. I don't care if you're a break and retest trader like me. I don't care if you're an ICT trader. I don't care if you're a trendline trader. All of this applies to every single trade that you take. If on the first 3 days of the week, you lose, or let's just say for an example, matter of fact, let's make it more generous. You win twice, lose once, the first 3 days. Let's draw that out. So you win twice. That is what it looks like to win twice and lose once with the 1-to-1 risk reward ratio with the $500 starting balance. At one point, you turn this $500 into $600, $100 gain, which is just a $100 gain. You won twice. But you almost forgot the most important thing, which is to explain what a 1-to-1 even means. I'm gonna keep it very simple, and I'm gonna use 10% as a starting point. If you have $500, mind you, I didn't even graduate high school, and I'm gonna know these numbers like butter. If I had $500 portfolio, so I enter in for $500 every single time I enter a trade, if I lose 10% of that $500, that is only $50. 10% of $500 is $50. So if you have a 10% price target or a 10% stop loss with a $500 entry, that is a $50 stop loss or a $50 price target. That's simple math. And it's very simple as if you had a $1,000 portfolio, 10% of that is $100. So it's very simple. I almost jumped too ahead of myself, but let's get right back into it. If you won 2 times the first 2 days and then lost once on a Wednesday, your account would have went to $600 and back down to $550, thus putting you up only $50, 10%. Wow, you caught 2 good trades and 1 loss. So now you have 2 days left in the week. You won twice, Monday, Tuesday, you lost once on Wednesday, you're back down to $550 on your account side, you're still profitable. But what happens in these next 2 days? You're anxious, you're ready to take a trade, you want to end the week green, whatever it is, you're just ready to trade. Let's say you win once and lose once, win on Thursday, lose on Friday. 3 winning trades with 2 losses, guys. Keep that in mind. 3 winning trades and 2 losses on the week. This is what it looks like for your account. You're only up $50 with a 1-to-1 risk reward ratio on every single trade that you take, which means if you enter in for $500, you're willing to lose or gain 10% on this trade. So $50, whichever ones comes first, whether it hits your $50 stop first and you sell it at $50 loss, or it hits your $50 price target and you sell it at a $50 gain. 1-to-1. Hence 1-to-1. First 2 days, you won twice. $100 gain, $50, $50, $50, $50. Then you lose on Wednesday, down $50. So now your account is at $550. Then you win once again, third winning trade of the week. You're back at $600, but then you lose on Friday. Now you're back at $550. You really didn't go nowhere, to be very honest. And you had 3 winning trades, 2 losses only. Let me show you guys exactly how greater your account would be if you started risking 1-to-1s. Now, don't get me wrong. I understand there are times where it goes in profits almost to 20%. It's at 18, it's at 16, it's at 17, it's ranging, it's almost into 20%, and it comes all the way back down to break even or stop loss. It is what it is. Those moments do happen, which we'll talk about that in another video, and I break down that a lot in a lot of my videos, because risk reward is the most important thing. But let's not get too ahead of ourselves, and let's talk about what happens if you were to trade the same exact way, maybe even the same exact trades, winning trades, 3 losses, 2 wins, or 3 wins, 2 losses. I'm gonna show you guys what that looks like. Now, mind you, guys, all you need is a winning trade at least 1 to 2 to 3 times a week, to be very honest. Sometimes even just 1 time a week if it's a very good trade. Let me show you guys why, the power of risk reward. So again, you win twice and you lose once. between the first 3 days of the week. So Monday, Tuesday, Wednesday. On Monday, you win once. Tuesday, you win once. And Wednesday, you lose with a 1-2 risk reward every single time. And so what does that mean? That means you're not going to sell for a gain until it hits your 1-2, which means 20% gains. Because guys, a 1-1 was 10%, 10%. A 1-2 is 10% to 20%. Meaning you're willing to lose 10% to gain 20%, a 1-2. If I go in for $500 and I lose 10%, again, that's just $50. If I go in for $500 and I gain 20%, how much is that? It's $100. So lose 50 to gain 100. That's how simple it is. Who's willing to do that? Every single trade you take, you either lose 50 or gain 100. And if you flip a coin and every time it lands on heads, you make $100, or every time it lands on tails and you lose 50, which one would you take? Would you do that? Well, this is what it looks like. Guys, I had to add a new line up here just because literally with 2 freaking winning trades off the bat, Monday and Tuesday, you would grow your portfolio from $500 to $700 off 2 winning trades. Now, guys, remember, the first 2 winning trades with a 1-1 only put your account to $600. You're up a whole extra 100, giving you enough cushion for the whole week to lose some type of trades. Because guys, you're up over $200 at this point. 2 winning trades puts you up at $200 portfolio. Now, again, what happens if you lose? Wednesday, you lose. On the 3rd day, which is Wednesday of the week, you lose. Let's talk about that. Look at that. You lose your $50. Now your account is still over $150, sitting at $650 gains, guys. You see the difference already off 2 winning trades and 1 loss? You're well above. You're well above. And again, you still have some cushion. You're up over $150 on the week. You can lose $50 of that again and still be up over $100 on the week, still green. So again, guys, this is a pivotal moment here. And the people that are going to click into what I'm about to say right now are about to get it. I was going to follow the same thing that we just did where we won once on Thursday and lose once on Friday. At this exact moment, even if I lose twice, lose once on Thursday, lose once on Friday, I would still be profitable. My account would be sitting right here at $550, just where it was as if I was trading 1-to-1s. But let's follow the exact model as if we were following this one, which was 3 wins on the week and 2 losses. So I actually can't even do that because it would be well above my charts at $750. Just know that is at $750, guys. I can't even draw it. It's so freaking far up. If you won once on the 4th day of the week, 2 wins, 1 loss, and then the 4th day of the week, you win once, $750 up in portfolio profits. And then on Friday, you take that loss, guys, your account would be sitting at $700, over $200 in gain from $500 portfolio. Now, honestly, I know I won't even be able to fit a 1-to-3 on my chart, but we're going to have to either way. And I want to show you guys that. We could barely even fit the 1-to-2s because guys, look at that. That's how much I want you guys to understand the power. There's so much power between 1-to-2s and 1-to-3s that it can't even fit on my board of explanation. I can even show you guys, but you guys just saw firsthand what it looks like. Even if I was to lose twice on Thursday and Friday, let's talk about something. Let's try something else out. Now we're gonna move on to 1-to-3s. I'm gonna show you guys what it looks like if you lose 3 times back-to-back for 3 days and only win twice, Thursday and Friday. The power behind 1-to-3s is insane. Let's say you lose 3 times back-to-back for 3 days straight on 1-to-3s, being 10% losses every single time. So $150 total. Day 1, you lose $50. Day 2, another $50. Day 3, another $50. Your account is sitting from $500 to $350. Guys, this happens quite often. A lot of traders are in this position where they don't have much money left over and they're worried. They're like, dang, I need to capture a home run. I need to turn this $300 back to $600. They're freaking out and panicking. Guys, don't worry, to be very honest. You lose 3 days in a row. Your account's down $150. You got $350 profit or $300 portfolio. Now let's say you win just twice. Matter of fact, we might even just do just once. But let's say you win twice. And guys, what is a single win on a 1-to-3? If a 1-to-1 is 10% loss, $50, that means a 1-to-3 is 3 times that. It's $150, meaning I'm willing to lose 10%, $50, to gain $150, 1-to-3. So within 3 days, I just lost $150, losing 3 days, 3 trades on 3 different times. Count is sitting at $350. What happens if I take 1 single win with the 1-to-3? Well, your account dramatically changes, which I don't know why it's up at $550. It should really be lose $50, lose $50, lose $50, you're down $150, and then you win once to gain $150. Guys, you're back at break even. And it climbs. Because guys, the power of 1-to-3 is so important. If you're losing down bad, all you need is a very solid good trade. And I'm not saying to YOLO calls, to load the boat and buy 500 option contracts or 50 micros. I'm not saying that. What I'm saying is you need to structure your portfolio with every single trade that you take. So for an example, every single time I go in for $500 a trade, I'm willing to always only lose 10% of that trade. And you guys see it every single time. If you guys are new to my YouTube channel, go back in my videos and you guys will always see it. Every single time I take a trade, it's always a 10% stop loss because I'm shooting for a 1 to 2 to 1 to 3. If I can get the 1 to 2, I'm gonna do my absolute best to hold for the 1 to 3. If I can get the 1 to 3 and I don't sell out, I'm gonna do my absolute best to hold for a 1 to 4, 40%. Guys, there are so many times where I'm down 3 trades in a row, or sometimes even 4 trades in a row, and I capture that one good trade and it literally recovers everything. And it's not me oversizing, it's not me over leveraging. It's me literally just entering in every single time with the same entry setup, same entry model. $500 entry, 10% stop loss. I'm willing to lose 3 times in a row, $150. If I capture that one good win, I'll be up back on my feet, break even at least. And literally it just shows you right here, guys. Let's quickly break it down and do a recap. If you're trading with the 1 to 1, the red line is the 1 to 1 example. If you win twice in a row, your account only grows to $600, which is really not that much. It's not life changing. It's not too crazy. Then you lose once, win once, lose once. Guys, your account really didn't go far. Like, you got to pull so much leg room to really get it going. Then what happens if you start trading like the 1 to 2? What happens if you win twice, lose once, win once, lose once again? Just like the 1 to 1. What happens if you do that? Well, your account grows from $500 to $700 super fast. Then one single loss still puts you up over $150 on your portfolio, guys, which is insane. Then you capture another win, puts you up over $750, and then one single loss back at $700, guys. Literally, that's insane. Literally, that's insane. 1 to 3. I literally gave the most worst scenario. What happens if you lose 3 times and only win twice? Matter of fact, we haven't even finished we haven't even finished Friday, but I just showed you guys what a 1 to 3 can do, the power of a 1 to 3. If you lose 3 times in a row and only win once, you're literally back at break even, which I don't know why it's up at 550. It should really be. And if you win on the 5th day, another $150, guys, your account is insane. So that is what it looks like to have proper risk management in the market. Now, a lot of people probably didn't watch this all the way through, but for the people that did, I appreciate you guys. Understand. This is what your account looks like when you trade low risk, low reward. This is what your account looks like when you trade medium risk, low reward. This is what your account can look like if you trade low risk, high reward. Now, of course, this is just me giving you the worst case scenario if you literally lose 3 times in a row and then win twice. There are many times, many good trading weeks where I'll be up 5 trading weeks in a row and I'm just consistently up fat because, guys, 1 to 3 is literally the sauce. And you guys could even play around with this and do your own numbers as well. You could even put, if I won twice, win once. If I won twice, lose once, or win 3 times, lose once, or lose 4 times and only win once. Guys, you can play around with this. It's literally simple as just managing your risk reward. So I understand I just said a whole bunch in this whole video. And if you guys do want some shortened down videos or just in general short educational clips, click follow, like this video, share it please with your friends. And I have a lot of educational videos, some very short, some very long. But this one's very long for the people that really do need to understand risk reward. Because, guys, I promise you, once you just make this simple switch of stop trading and losing so much or having high risk, low reward setups, you need to make sure your setups are A1. So when you do answer them, you can apply this to yourself. You can say to yourself, okay, worst case scenario, I lose just 10% of this portfolio. Is that really gonna hurt me? Really, I'm just gonna lose 10% of this trade. If I enter in for $500 and I lose $50, to be very honest, it's not gonna make me go broke. I'm not gonna go break the bank. I'm not gonna go get a loan. I'm not gonna go ask people for money because I lost $50. It's when you enter in a single trade for $500 and you let that trade go all the way down to $100. That's when you start reevaluating yourself, asking yourself questions, doubting yourself. Because, guys, it does not need to be like that, to be very honest. Losing does not need to feel like that. Losing feels a lot like this. Only lost $150 in 3 days. Wow, that's not bad. Oh, got a good trade. Recovered it all. Happy. So, see you guys out there. And I appreciate you guys watching the video.